Right, so we had a big event on Thursday in the Indian markets, and the big event was 153 point Nifty fall, almost 2% down on the Nifty. It just happened around 12:30 as the news came out about the shelling by the Indian Army on the line of control with Pakistan, and the market just cracked after that. It had risen in the morning on Thursday, but about 20-30 points, but then quickly lost ground and really did not recover on Thursday night or evening as it closed. And then today we seem to have done some little bit of a, uh, I wouldn't even call it a bounce worth mentioning, but we closed 19 points up, so 20 points up. But mostly dilly-dallying around 8,580, 8,600 with some notable up moves in Oro, Bank of Baroda, Grasim, etc. And on the other hand, a mixed bag on the way down with Cipla, Tech Mahindra, the top ones on the Nifty. And yeah, so this was today's, and then but in the broader picture, if you just look at the Nifty chart, as you should be seeing it on the screen right now, candlestick chart, not a pretty picture at all. This very significant red candle just happened on Thursday. Today it's like trying to go above 8,600, but then clearly, as we have been mentioning over the last, I think 2-3 weeks at least, the trend has definitely changed from an uptrend to a not uptrend. Does not mean there's a downtrend, but now I think we can confirm that and say it is a downtrend, and more so it happened on tremendous volumes. Just could be a panic sell-off, or could be the start of a panic, a much bigger panic. We don't know. Today the volumes have gone back to normal on Friday, but Thursday they were like much higher, as you can see, compared to any volume for April 2014, right? So this is the same sort of volume that we are seeing when Modi got elected, or rather market went up on that frenzy, and we are seeing a similar massive selling volume now after almost 2 years. So that's something really significant to note, because this is like multi-year events that we are talking about, and such damage to the market does not usually recover very quickly. Sentiment, and even though nothing really, as far as I know, nothing really happened on the India-Pakistan issue today. I don't know if I've missed any news. Let me know if I have. It's definitely not out of the woods at all. This is not going to go back to let's be friends again, and or just we'll just have a blind eye to each other's activities. It's not going to happen, right? So things could really break down a lot. But having said that, for those of us who have participated in the conversation that we have about cause and effect versus event and correlation, I think this is an excellent and a very timely example of that entire discussion. I'm not going to get into that in the webinar. Just for those who are aware about it, you know what I'm referring to. And this downtrend or a bearish mood or bias had been set not today, but definitively a good 2 weeks ago, and it's just a sort of follow through of that. And in one way of looking at it is that LOC firing is just an excuse. It's not a reason. It's an excuse for the market to go down and do what it had anyhow decided to do. It was looking for an event, a news to take the plunge, and that was a very nice one, a very convenient one, and that's it. So today's session is basically about how far down can this go, or are we going to recover from here? And if so, what steps can we take? Now, before we get into that, we'll do our usual global market review and see how the global markets are. So on your screen now, you should be looking basically at the S&P 500 index, right? And the S&P 500 index is essentially at has cooled off from its life high. So that's one of the most important things to keep in mind. Again, something that we had been referring to for quite some time. It broke through old life highs. I'm not going to spend too much time today on that. Broke through low old life highs, which were off in the, what is this period, 2015, and then has successfully made new life highs this year, and but not been able to sustain those high levels, as you can see. And that is something also we spoke about, the bearish tendency or bearish bias in the US markets a couple of weeks ago when we had the last IMR. So more or less this is sort of continuing through. Nothing new about it. These are so this is 1 second. Yeah. So 29th market's pretty bearish. As you can see, that crack happened more than 2 weeks back. And as we speak, as far as just to get a quick overview of the US markets, which are open right now, they are pretty green, almost a percent up, 0.8 across the entire S&P and across the Dow Jones. Well, it's going to look like it's taking a bit of time to come. Okay, why is this? Okay, so really, okay, so there's the Nasdaq, all about 1% up, all the sector indices inclusive. They all open in the red at the and about almost 1/3 of the session over, and you're seeing them, sort of climb back compared to yesterday's. So they had opened lower, but now there seems to be some pretty decent recovery that is going on. In the Dow Jones Industrials is up 1%, and the Dow Jones Transportations is up more than 1%. So some sort of well, I wouldn't say recovery exactly in terms of the US markets. Could be a bounce. I don't know. 1% is pretty good and strong. Definitely, there's no doubt about that as far as the US markets are concerned. And coming to Europe, what we can see is the DAX up 1%, which is definitely impressive, right? And the rest of the, well, FTSE, CAC, all basically flat, and these have essentially closed. It looks like, I was wondering, okay, just giving, So if you see the snapshot data, you can see how on Thursday the DAX also fell very sharply, this fall on the right edge of my screen, and then it has just recovered today to give it a green tick. In Germany, a lot of concerns about Deutsche Bank and whether it could fail, not fail, sort of mixed signals, whether whether it's going to get a government bailout, not get. All sorts of things have been happening. So DAX, I guess, a bit more volatile because of that big news, or one of the biggest companies there. But when it comes to the rest of Europe, more or less flat, 0.1, 0.2%, or even down 0.3%. All right. So going back to the situation in the rest of the world, you've got that, and you've got uh, the Dow Jones. That was the S&P. The Dow Jones more or less, exactly the similar picture, nothing different. Uh, Basically off their life highs, and quite possible that the Dow Jones at some time, maybe next week or something, obviously not today, could break the support level. Same thing with the S&P 500, and if it does that, then another few percentage points down on the macro or the large cap US indices is definitely possible. Looking at Germany, so right, so Germany, a mixed bag, basically dealing with this fight of this 10,500 mark. Why does it want to stay up? Does it want to stay down? We spoke about this tweezers top and double top that happened on DAX over August, September of this year, and then finally broke down with a gap down. Attempted to go back up, but really no strong sign here of any potential recovery. The 1% green thing here today is not there. This is an end of day chart, so it will get updated only, well, tomorrow morning India time. But this is like, still in a sense no man's land. Does it want to go up? Does it want to go down? We do not know. Right? Looking at FTSE, right, so FTSE looking definitely more healthy than DAX is. That's a big plus. And as a matter of fact, the FTSE could actually be poised to go up and hit 7,100. The Brexit issue is still not over for FTSE. That's definitely one thing to keep in mind. So the FTSE flat today, are actually a little negative, but I think well poised to go up about 100, 120 points on the so London is there. CAC, so one of the biggest laggards in Europe, CAC, leaving aside Spain, Portugal, etc. I think still in no man's land, not able to break 4,600, not able to go below 4,100. So there's nothing more to say till it does one of those two. We just wait it out. And then we look at say Nikkei, just to look at what's happening in the Far East, Tokyo. And well, that's also neither here nor there types. You can see the that 17,000 plus minus 200 point iffiness which is there on the charts. So that's uh, not really. One thing is for sure. I mean, you look at all this. One thing is for sure, that there is no um, um, strong chart which is actually going up. If there is a bias, then that bias is at best sideways and most probably down. This is the Hong Kong index, the Hang Seng index, and that's definitely been trending up. That's been doing that since June, July this year, hitting a May, July double bottom, and then it's been going up. And now, is this a consolidation that's going on, or is this beginning of a fall? To me, looks like some sort of consolidation is going on. So I would now say that of all the global indices that we have seen, the Hang Seng basically looks the one, if I had to bet on globally, to go up further. I just very rarely look at the Australian index. Let's have a look. And interesting, because it's showing something very different from all the other so-called Western world indices that we generally talk about. So first of all, a very different picture, which means a very different character in a very different set of circumstances, probably all local ones, which are determining the chart and what this is doing. Some sort of a big correction at the end of August. I think this had to do with some very finely balanced election results for the Australian Parliament. Wasn't sure who's going to become the next, not even forget the next PM, which party was going to. I think there's something like just one or two seat this way, that way, and there's some second count, third count vote. I'm not sure. Maybe because of that, just speculation on my part, but clearly since mid-September or first week of September onwards, it's been strongly trending up. So if I had to buy one global index, it would definitely be Australia. And if I had to, the second bet would be probably the Hang Seng. Everything else across Europe, across US, sideways too. Sideways to a negative bias would be my overall opinion. So what does it mean for India? Well, globally, I don't think there is any good news, at least not from Europe and US, and the Indian markets are hardly bothered about what's happening in Australia. To some extent, Hang Seng, but really not much of an impact. Nikkei would be the other thing, but that's flat. And therefore, giving I think right now, the local factors and parameters are far more of interest to the Indian market than global factors. But all said and done, I think any global negativity will add, it will not do anything else but add more pressure for the market on the Nifty to correct. So in my opinion, any move up, especially towards say 8700, 8720, should clearly be used for shorting. Okay. And I don't think there really is anything else to do. It seems like a pretty clear-cut short, especially because of this massive volumes. Even on a weekly scale, these volumes are exceptionally high. Also, we have the first significant weekly red candle for the week gone by, which has not really happened for almost 4 months. You know, if you consider this one, right, or June, July, yeah, about 4 months. So that's something, and looking like to me a top-heavy type formation, and more likely to go down than to go up. Now, I think the question is how much down? I would say 80, 84, 83 is where the next level is, and 82 should not be ruled out. Levels of important support, that's basically the thing, and really any substantial, I think, support in the current circumstances is only around 8200 to 8300 zone. So we are at 86. We are basically talking about at least 2, perhaps 300 point fall on the Nifty. For those of us who have been on the fundamental review that we did over the last 3 days, really eye-opening, really incisive, really amazing to see how different sectors in the Indian economy are behaving very differently. And there is, when you add that element, the FA valuation aspect to this, then there's all the, I wouldn't say all the more reason, just additional evidence that it's more likely to go down than to go up. So a shorter's paradise almost. With both on the FA and the TA side, just requires a lot of patience and a lot of discipline. And the biggest risk is right now basically events, and events can very quickly overtake anything that is happening in the market. They could be all sorts of positive or negative events, in my opinion. Negative events are the ones which I think the market, any even slightly negative event, the market is going to latch on to that and probably go down at any small opportunity, forget any big opportunity. Going up, however, is going to take a lot more convincing, and until something major in the nature of a global diplomatic intervention at least, I don't think the market is going to take it up any seriously. I mean, in a sense, you could say this could be the first step of calling the bluff, the shelling across the LOC, and there will be hawks on either side to see where this escalates to, what can happen, what can't happen. So it'll be definitely interesting political news. For us down here in Bangalore, it seems honestly, so far away. The news guys are, warmongering about nuclear missiles and this, that, and all. But well, at least if you're in South India, I think you'd be pretty safe from all those things. Anyhow, leaving that aside, this sort of got sidetracked. It's going to take a huge amount of positiveness for the market to go up. There's going to be a huge amount of credibility required for any decision which suggests that what do I say? What is this term for it? Military term. The low something. I mean, infiltration and all that is going to get over. I don't think any more talk, or even for that matter, any more treaties and photo ops are going to cut the ice. India will definitely want a lot more substance this time. Until then, the markets are not going to, uh, uh, sort of have the confidence that for the next many months, if not many years, the issue is sort of settled. All right. So all in all, it's a downward bias. 8800 being hit is something which is um, very unlikely in my opinion, and we will well, I guess just have to just wait and watch and see what happens next, right? Okay. um, so yeah, globally, locally, the bias clear cut downwards. So if you are a long only person, then you have to reconsider your views. And if you are a shorting type person and you are confident about shorting, whether it's through futures and options, definitely more opportunities left in the coming days and weeks. So with that, we um, 1 second. Okay, yeah. So just looking at the list of sector indices. So what we'll do is, make this as sharp as possible. So what I want to do is close this part of the session here, and in the next one we'll look at all the sector indices and go into the Nifty stocks in a sort of rapid fire. I think given that I would expect a lot of levels, significant levels would have been broken, and no point spending too much time over each and every chart. There will be some charts that will be outstandingly, what do I say, mouth-watering. I'm quite sure, and very, for those of us who are able traders on Monday morning, I'm sure the week ahead has lots of opportunity. Is there anything else? The news, just trying to think. So Dasera starting, Navratri starting, Diwali festival season starting and all. I am not sure that any of this, especially if the border escalation, border skirmishes, yes, that was the word I was looking for, escalate significantly. I don't think the nation's attention will be on anything else. But all said and done, I think strong consumption-led, demand-led activities could happen in particular in specific sectors and indices, sectors and stocks, and that is something that one should actually look very sharply for in the weeks ahead. So on the one hand, you have a huge macro geopolitical issue, but on the other hand, you'll have these micro company-specific issues, which if one is nimble, quick to spot them, I think a lot of opportunities both on the long side and on the short side which will present themselves. Especially the ones on the long side will be stocks or sectors or subsectors which will rally up very sharply given the resolution of the macro issues or even some good news on the company specific or sector issues. So those are the broad factors to keep in mind. Hey, so great. um, Closing the session here. Any feedback, anything to get in touch, you know uh, you have the contact information. So answer to the question, what after the fall? I think a further fall. Any bounce, basically to be shorted, 200-300 points down on the Nifty. And if it escalates, don't be surprised that this just 100-150 points down every day. In a week, 10 days, in a month, you could be even 1,000 points down on the Nifty. You cannot rule that out. Right, 500 to 1,000 points down or perhaps even more is easily possible if escalation of hostilities happens. On the other hand, going up is maybe 50, 100 points. So in a sense, a positional multi-week at this point situation is clearly on the bear side, and somebody willing to put the money on the line has the potential of getting a multi-bagger return in a few weeks through futures and options, right? So all the very best to you. Right, so those of us who are hanging on for the next webinar, just hold on and you will get the link for the next one. We will do all the Indian sector indices and do all the Nifty stocks in session 2. Right. Okay, great. Thank you.